Times are tough for any potential first-time buyer, especially in Vancouver's expensive real estate market. And the decisions are getting tougher with long-term mortgage rates on the rise. Should one lock in now or wait in the hope prices will fall?
You know what, I just think the quality of life in Vancouver and places like the North Shore is so good that it's not really going to burst. You know, there's so much demand for people coming to Vancouver. So.
No point in waiting.
No point in waiting. I'd rather get in and start building equity as fast as possible, and just, you know, that's it. Go on.
The bond markets drive long-term rates, and recent suggestions from Washington that it would start slowing down on purchasing bonds as the American economy recovers has sent the bond market up. Banks immediately shifted long-term rates as a result. Today, the Royal Bank, for example, has its posted 5-year rate at 5.14% unchanged, but its 4-year rate is up by almost 40 basis points, and its 3-year rate up by 65 basis points.
The big one is the 5-year fixed term, and the initial move was Royal, who offers the 5-year posted rate of 3.09%. Well, the first announcement was that they're raising it to 3.29%. So we're going to start to see these minuscule sort of increases in rates, and it could mean the era of record low rates, the opportunity to go finance a 5-year mortgage for under 3% might be gone, but they're slowly starting to increase.
Not to panic, says this mortgage broker, because the Bank of Canada's prime rate hasn't changed and likely won't for at least another year.
I would keep it variable. Right now you can get a variable mortgage, 5-year variable mortgage at prime or 3.5 or 3.25, depends. The banks always have, you can barter with your banker at the bank, and or come to us and we'll shop it around for you. There are some good rates out there, variable rates, and once you can always lock into a closed mortgage with no penalties. So meanwhile you pay a lower interest rate below 3 or very close to prime rate, and once you decide to close your mortgage and the rates come down, then without any penalty or expenses we can close it for you. Can't get any better than that.
If you can reduce your rate by just 1% on a $200,000 mortgage, that saves you $2,000 after-tax dollars in the first year and $32,000 over 25 years. Ted Chernecki, Global News.